Hey everybody, it's Adrian Cryptobirb, and after time of preparations and a couple of weeks of preparations for me, away from webinars, away from let's say the markets for some time, I'm back in the game, and I'm happy to share all my updates regarding Bitcoin, regarding what happens next after this sort of like a local price shock crash that happened to crypto. And we're going to take a couple of requests. So if you guys want to hear some updates, if you guys want to stay tuned in the loop, make sure you stay actually with me for the time. We are going there right in a moment. Hey, hope you can hear me fine. Hope you can see me fine as well. Please let me know. I'm using different sort of like angle camera this time for a moment. But yeah, what's up? What's good? It's been some time, 2-3 weeks since I actually got proper preparations for my CMT exam, which I actually did yesterday. Results are of course not obvious, not immediate, not instant. So we have to wait and see how it goes. But all that said, I'm happy to get back in the game with you guys and answer some of the questions. See about what is going on with crypto, right? So to start with, we know there have been CPI, Consumer Price Index updates. So let me actually just start off from this very part. Okay. Let me go very quick and play the screen for you. In the meantime, by the way, guys, I want to say hi to everybody. Hope all is well on your end. Let me know very quick in the comments where you're writing from, actually. If you're watching that on YouTube, make sure you hit the subscribe button as well. It's time to get back on that track, everybody. Let's see. Okay. Boom. There you go. What do we have? It's New York Times. And basically what it says is that Consumer Price Index, CPI, Consumer Price Index, which is one of the ways to measure inflation rallies and soars. Okay, consumer prices rose at the fastest pace since 1982. It's been 40 years since we actually saw this magnitude of consumer price index. Okay, so if we have a look, this actually tells you that officially the government admits it. Okay, and it's a global thing, of course. This is not just a local thing for states. They say and purely admit to 6.8% inflation in November. Right? Not December. The year has not closed yet. And what this means is basically, well, they say we have surpassed by almost 3x or 3.5x the expected inflation. Okay. This means that the cash holdings, the cash positions that you may have in your portfolio, the money positions that you have in your portfolio are actually losing in value, and they are losing in an exponential manner. We are talking about exponential manner, everybody. This is no bullshit, right? We are talking about exponential rally of the pace for how fast you actually lose money, lose the purchasing power of the currencies. Okay, if you go ahead and actually see what's up on the dollar side, right? Let's have a look for what the XY tells you for how it reacts. I think this is the old chart. Let me play very quick the new one. Not copy. Right, the latest one, I think it's of May this year. Yeah, we have Bitcoin, we have S&P 500, which is equities, we have dollar index, and we have gold, right? So the trends that you can tell comparatively, like if you compare it, sideways, uptrend, local uptrend, and pretty much sideways, right? It's not necessarily like it used to be. It used to be like a channel, descending channel, no matter how I call that, but it's not anymore because we are basically trading sideways right now. So this is a fact, ladies and gentlemen, everybody, that the markets are correlated. Markets are correlated in a stronger or weaker manner depending on whether there is a free float. The markets got correlated after, well, the markets were freed, after the markets got the proper free float, the public trading, which was, of course, pretty much put on hold uh, during, the communism times, of course, that the countries were not really open to trading, were not really doing any trades nationally. So the moment that the markets, kind of like got, I should say, freed up for the free float, we saw enhanced correlation between the markets. And most importantly, this enhanced correlation means that this kind of like polarized the situation. Some countries, some currencies, some indices, for the nations, be it Nikkei for Japan, or S&P 500 for states, right, or DAX for Germany, Eurox, 50, whatever. They all started trending in a correlated manner. You can have the correlation pretty much anywhere between -1 and 0.1 and 1. -1 for 0 to 1. Okay, -1 means there is an inverse correlation, there is negative correlation, which means basically that, well, whenever the dollar trends down, right, the gold should trend up, of course, right? So we have 2020, the gold trends up, the dollar trends down. Similarly, you would have Bitcoin trending down, right? And at the same time, it usually is correlated with dollar rallying, right? So you see these local correlations, but it's kind of like, it's not a holy grail. Like, don't fool yourself that you found a holy grail by discovering the markets are correlated. Of course they are, right? Of course they are. The problem is that this correlation changes over the time. Nothing in the world, nothing in the market is really static. Everything is dynamic. Every second in the markets is completely different than the one that was right past before. Okay, so it means that there is only limited percentage of probability, limited probability and certainty that you can apply of having this correlation sustain over a longer period of time, which means that usually if you see deflationary crashes, like if we opened up the charts, right, stocks and bonds, for example, used to trend together before deflationary crash happened in 1999, 2000, 2001. Okay, the dot-com bubble actually exploded the markets in a way that some correlations inverted. Some correlations went completely like 180 degrees the other direction, which means that stocks, kind of like decoupled from the bonds. And what we are seeing right now, again, is, I should say, in terms of deflationary shocks, in terms of crashes, some price shocks, just like a price shock, by the way, by definition, is an unpredictable event. You, by definition, cannot predict that. You have no idea when it comes, because guess what? You have no idea when a president of a nation is going to be assassinated. You have no idea when there is a drought coming, for example, due to magnetic changes of the magnetic field, electromagnetic field around the sun, right? And when it comes with the heat waves. No weather at times helps you predict hurricanes, which actually wipe out the full year crops, gatherings, and wheat and oat. The food market actually rallies because of that, because there is a sudden shrink in the supply, right? So those price shocks that come unpredicted, just like the COVID crash came in, right? Those price shocks, they happen. Only thing you know about them is that they happen from time to time. You can never guess when they happen, but all you know is that when they happen, they crash the markets. Let's say, how to call that? They tend to reverse the correlation as well, right? That's what I'm referring to. So just like deflationary crash of the dot-com bubble occurred, it reversed correlation on the markets, and at the same time, all the markets all the markets started like the correlation went up to 1.0. Basically all the markets were tanking, right? And that happens when an unusual situation comes and kicks in the markets. And this unusual situation, just like Elon Musk tweeting a joke on Bitcoin, you try to open up a chart and tell me where and when, specific time and period of a year, where Elon Musk is going to tweet about Bitcoin in a positive or negative manner. Okay? It's impossible. It's impossible. So the only way you can avoid price shocks is not being in a game at all. If you cannot withhold price shocks, you better quit trading. It's not for you then, right? And I'm being very serious. Listen, not everybody is a good trader. Not everybody will make it. Okay, like same way you cannot be a doctor because just one day you wake up and decide you are a fucking doctor, right? And you're going to go and make this like to proceed with the surgery of some random people. Same way you cannot really open up, wake up one day and decide, okay, I'm a brilliant trader, right? There are certain professions that don't really apply to certain people. Well, I would be a terrible doctor, right? Like when I see, I don't really conform well or bear well, the medical stuff, let's say the surgeries, whatever. So that's me. I would be a terrible doctor, but that doesn't mean I'm trying to force being a good doctor, right? Because I'm perhaps born this way. So that's what I'm saying. By just pure will and doing nothing about the markets, you're not going to be a good trader, right? And how this does actually correlate with the price shocks? Well, if you cannot withhold price shocks, knowing that they will come, you have no idea when they come, but knowing that they will come, and if you're not really able to cover them well or bear them well, just don't play it. Just exit the market and chill, right? Not everybody is going to be a good trader. That's a harsh truth, I promise, right? And what is also true about the price shocks is that you cannot really, the only way, just like I said, not to get hurt from them is to be out of the market, which means you're not a trader, which means you're not investing. You're just sitting in cash, which is of course losing value in that per the CPI. So all that I'm saying, guys, is that you see certain certain amount of like shocking information coming up from the institutionals, right? From the Fed and whatnot. You see inflation soaring, right? Inflation soaring like in an extremely fast way. So how this actually correlates? How this does correlate with the markets is, well, inflation means you need inflationary hedges. And guess what? Entering a random shitcoin at 100% all-in portfolio doesn't make you a hedgy trader, doesn't make you a hedge investor, right? So by hedging, I mean having an actual portfolio structure, portfolio diversification. And so many people out there, there's almost 1,000 people watching this live. And usually about 90% of traders don't make it, right? So instead of whining, let's say, about something that is inevitable because price shocks happen, right? I took a hit as well, right? I was busy with my preparations for the exam, and of course I lost a bit on that. Some of my low leverage longs, like 2 or 3x leverage longs, which I set up like 2-3 months ago, they got liquidated. But guess what? I'm putting 0.2% of portfolio in that bullshit, so that whenever that price shock happens, I don't lose my entire portfolio. But what other people do often is they put the entire life savings on 20x leverage, and guess what? Instead of trying to fix their life, right? They come in and actually, just try to intoxicate everybody else, right? And the part about the price shocks is that they freeze the markets in a way. They freeze the markets in sideways, right? Let me show you what happens. What happens on the market in terms of the price shock okay, is that you usually most of the price strokes are like against your favors. Most of the people are never prepared for the price strokes. So what happens is it trades like sideways, whatever, and then it shots down, like immediate shot down, like 20%. Just like Bitcoin had this local price stroke, it was like 20% candle, 20% downward candle in a matter of 1 hour or something like this. Right? This is completely abnormal volatility, which you don't know when it comes, but you know that eventually it will come because that's how it works. This happens that whenever that such price shock occurs, some unpredicted event like that occurs, right? Then it takes time. Usually, Bitcoin bounces back because of the bargain hunters, chasing the bottom. So the Bitcoin remains bought back up immediately, right? Then it takes some time until it finds some rational back again. Because guess what? Most of the people have either stops placed between, if they are highly leveraged, they're mostly placed between this. If there is an over liquidation, big amount of stops aggregated in here, then the more stops aggregation on the certain level of support, the more downside effect it has once this layer is broken, right? So this takes time. This takes time for the market to recover. It's not immediate. It takes time, and by it takes time, it means that people, first of all, have to escape this denial, have to accept this new reality that they lost money, right? And worst part is that some people never recover from that. I mean, mentally. To start improving your life, you have to escape the denial loop, right? If you lose money on the week down, right, and it reaches for a stops, whatever, and it immediately bounces off, like your positions are gone. Of course, that is why you never put in a lot of money in leverage. But then you kind of like, your first reaction is, okay, this is not happening. This I must be dreaming. Like, this is why the hell did it happen to me? It's government's fault. It's Cryptobirb's fault. It's your fucking fault, right? Because you are in the market. You take the risk. If you cannot hold the risk, then go and catch a cash money position and sit there for your entire life, or do nothing about your money for the rest of your life. That's a risk, right? And it takes time for the market to start being quote unquote technical. I'm not going to say rational because there's nothing rational about crypto these days. But it takes time. And we are currently in this phase, right? We are currently in this phase. Let me actually just take some bigger. Does it make it bigger? I don't know. No. Anyways. Yeah, so we are basically trading sideways right now, right? We are trading sideways. If you take Bitcoin chart, this is exactly what happened. You see that we are repeating certain repetitive formula. Okay, so see above that we have the drop, right? This is a subsequent drop. Here, of course, the 1 hour candle just smashed the lows pretty much. It still made still made a higher low, which is technically in a bullish uptrend, but people don't care anymore because they're scared to death. But as long as it climbs lows and highs and higher lows and higher highs and higher lows, then this is an uptrend, right? This is the most basic, simple, foundational and fundamental lesson of the technical analysis. Whenever the trend makes a subsequent series of highs and lows, which are higher in a sequence, then this is an uptrend. The other way around, lower sequence of lower highs and low lows, is called downtrend. Anything in between that doesn't match this or this is sideways, right? So whatever other chaotic formula. So we are experiencing again a similar situation that we saw. Well, here, if we take it, also we can turn on the new version of bpro for a second. Is it going to hide or not? There we go. Right, you have pretty similar situation. You had the supports and abnormal volatility. You had the supports in here, but this actually didn't get swept. So you had the support here, you had a support here. So technically supports should be held, right? You had the local support in here before the crash happened again, and we are repeating some sort of like a similar formula, right? Similar formula as in it takes time, like unless it's a very bottom of the market, then it rallies in so-called like U-turn, right, or V-shaped reversal. But most of the instances, the higher we go, the people need more time to, well, let the market shake it off for a moment, right? To people, for there is more people, there are more people in the market, so more the market needs to take more time to actually recover, and it takes time to go sideways, right? And it takes time to go sideways. So I'm not necessarily expecting a V-shaped reversal, but the price shocks, by definition, they get a proper mean reversion play. Mean reversion, as in they come back. They do not disturb long-term trend trajectories. There are these local disruptions that cause chaos in the markets, but they don't really disturb the market direction. All it does is kind of like froze the mud and sand into your eyes to get kind of make you blind for a moment, but that's it, right? If you like, statistics show that if you actually just hold through it, then vast majority of the cases, unless the world nukes and collapses and nuclear bombs go off, then unless something like that happens, the market rallies back after some time because it's supposed to return to the mean. It's supposed to return to its fair value. Okay, and this is driven by the momentum. This is driven by people buying in the dips. And guess what? Historically speaking, anytime, I have no idea what that is, to be honest. That is, I don't fucking know what that is. This is a scale. You stand on it or whatever. I don't know. But this is extreme fear going on, right? Of course, people fear because they go liquidated. People only aren't happy about the market, right? Not when the market turns green, of course, but people are only unhappy when the market dumps, right? Nobody argues when the market goes up. Everybody's happy. Everybody's grateful, thankful, kind. But the wildest beasts come out of the people, right? Whenever they actually just see that their shitcoin is losing the money. So basically, we are at the levels, right? Usually the levels between like below 30, but more strictly below 20 points, have always been an indication of bottoming process, right? Of bottoming process. This was June, July bottom. This was September's bottom, and this is this, right? So for me, whenever there is extreme fear on the market, and this extreme fear, if you have a look, this level of, I think it was 15, 17, this level was lowest seen only in June, July, right? Just like it says. So this tells you, again, historically speaking, historical records tell you that historically extreme fear is of good buying opportunity, right? And that's it. That's it, right? It takes more time. Of course, December targets, got invalidated. I was wrong about that. I'm happy to admit it. And to be honest, I don't care because I can wait a bit longer, right? But nobody's going to take your responsibility. Nobody's going to. There's actually, it's called. There are multiple biases, cognitive and emotional biases, that the behavioral finance distinguishes and differentiates. But one of the how to call that? There is this self-attribution bias where when the market turns green, it makes you overconfident, it makes you overcomplacent, and you start thinking, okay, I'm the best fucking trader in the planet, right? What can go wrong? I'm a genius. I'm a genius. Like I must be the best trader in life. Like fuck Warren Buffett. Fuck Livermore, Jesse Livermore. Like I'm a genius, right? But guess what? The same people, right? They attribute their wins to themselves, but when the market tanks, it's not that their responsibility. It's the government's fault. It's Elon Musk's fault. It's my fault. It's your fucking neighbor's fault. It's your family's fault. It's your dog's fault because his tail perhaps swept the coffee off the table and he pressed 100x long. I don't know, whatever. So and this is called the self-attribution bias. And biases in behavioral finance are the reason why people lose money, right? So as long as you can accept that the behavioral biases, the distortion of your rational processes, the thinking processes, as long as you know and are aware of it, then you're good. But if you undergo these behavioral patterns and you actually lose money on that, and you start blaming anybody else but you, like blame is not necessary at all. But if you start blaming anybody else but you, like I don't say this is childish because this is beyond childish, but like man the fuck up. Like you're trading or not, right? If you're not good at trading, then quit it. If you're not really happy seeing your positions lose money, which is always going to be the case, you'll never see 100% win rate, then also quit and sit in cash and enjoy like CPI 6.8% losing purchasing value every year or every month, right? Like it's very much required, guys, to get the shit together out of the web, out of the price shocks. And all the reason that I'm saying that is that in the extreme fear that this has become a tendency, right? Because there are a lot of people who shouldn't be in the market. Just like I said, I would make a terrible doctor. I would be a terrible doctor. Why the hell would I ever force that? Right? Not everybody is going to be a good trader. If you cannot withhold losses, then trading is not for you. As simple as that. And you do better if you quit it. I do better if I quit being a doctor, if I would be a terrible doctor, if I was a terrible doctor. Okay? And that's it. And in the extreme fear, only in the extreme fear, the way that we have right now, the sentiment is at the extreme lows, which basically tells you that, historically speaking, again, this is a good buying opportunity. The majority is usually wrong in the extremes, right? So how did this does correlate with Bitcoin right now? Just like I said, the long-term direction, right? The long-term direction that you see in here, this is basically 50-week moving average. 50 weeks. This is in a year you have 52 weeks. This is a year-long moving average. This shows you the fair price, right? This is basically a fair price of according to the past year of price action. So ever since Bitcoin started trading this year, right, we are basically seeing the fair price of Bitcoin at 48. Sorry, not 48,000. I think it's close. Oh, wait a second. Right? I think it's close, yeah. But one way or another, the way I see it, the way I see it, like see this and look at this, is that you have, just like I said, you have this trend which is defining your direction. If you want to know the direction, turn off the chart. Right? Turn off the price chart. This is your direction. This is your trend. This is your averaged, smoothed trend. And like, say what you want. No matter how many times you tell me that, no matter how many people will tell me that, the lie repeated 1,000 times doesn't become real or fact. To me, this fucking goes up. Which tells me that year-long trend for Bitcoin goes up. Which makes me think that anything that happens against this local trend is a usually short to medium-term deviation, which most of the time serves as a good purchasing opportunity, right? I'm not saying it's good for everybody because clearly some people cannot withhold losses and they shouldn't be touching money in their life again at all, right? But those who actually are patient, those who can observe the trends and can withhold and understand and accept that losses are part of trading, right? There are even trading systems, trend following trading systems. Our thing it was of turtle trading that you would have 30 to 40% win rate, which means that every 10 trades, 7 trades would be losing. If you can withhold that, then you actually get highly profitable of something that is called a fat tail, because the markets are not really normally distributed. The markets, the prices of trends of the bull markets, they have this so-called fat tail. And this fat tail, which is excessive returns, which is this part, excessive returns, abnormal returns, they do exist, and they do come from the existence of trend and momentum, from the existence of momentum as in the tendency for the market to continue in one direction. This is what we call the momentum. And this excessive abnormal returns over the buy and hold strategy is your risk premium, is your premium for being patient and watching the trend. Okay. If you cannot withhold losses, if you cannot withhold 7 losses out of 10, then you don't profit from that. And you end up pretty much as a loser in trading. But otherwise, if you understand that this is the long trend, okay, then it's not a fucking bear market. I mean, again, no matter what you say, this is not a bear market. Okay? As simple as that. And technical analysis, if you are a technical trader, if you base your trades based on the technical analysis, then you have to respect this. You have to respect the trends. And any shorts into the mean, into the average, well, are quite poor risk to reward ratio to start with. But then they are quite poor decisions because they come from your behavioral patterns and behavioral perception biases, which make you sell the bottom and buy the top. Okay. So long story short, we did manage to close the week over the 50-week average. This to me is locally bullish, right? The crash itself that happened on an hourly chart, it stays on an hourly chart. You cannot tell even the crash happened on a weekly chart. That's the point, right? That's the fractal nature of the markets. Bitcoin can be bullish, bearish, and neutral all at the same time, right? What matters and what differentiates it is the context, is the actual time frame. It can be bullish, micro, or extremely bearish on 1 second time frame or 1 minute time frame, but it can be extremely bullish on 1 week time frame. And there's no good answer to tell you like whether Bitcoin is bullish or bearish, because it depends on the time frame you choose, right? You're always going to find a bullishness and bearishness depending on the time frame. So here, usually what happens, just like you see in here, right? It takes some time for the market to recover. I'm not going to tell you it's going to repeat exactly candle after candle, one by one, and go kindly and actually just, make it exactly the same pattern or do something like this. You never know. You don't have a crystal ball. You don't have no fucking idea what happens. Perhaps an asteroid, there was a news that an asteroid was coming into Earth, like stratosphere, whatever, or atmosphere. I don't even know if I wake up tomorrow. I don't know if we don't die overnight, like all of us, right? Like dinosaurs probably didn't expect going extinct either, right? So assuming things are going to behave technically, assuming that things are going to, not change due to external exogenous factors that disturb the markets globally, then to me, I would expect the local range between the local level of weakness, which is this, which becomes the resistance, somewhere between $55,000 and $56,000, right? And the floor. And guess what? It is possible, just like we saw in here, right? Similarly, that you're going to see the whipsaws, like whipsaws on the floor. In case there is some unpredicted news, which usually happens, like China bans or Elon Musk choking around, or Fed's imposing new taxes on crypto, like, again, whatever, right? The monetary policy changes, some Evergrande news or another, like, you cannot tell when this happens, but if that happens, there is a chance it sweeps the lows, because here, like, people who bought their longs, who got their longs, they would place the bids. They would place their stop losses right beneath, most likely. So what it does, when you have a support, it trades in kind of like flirts with the support, then it sweeps down, sweeps the low for a moment, and it turns back again, right? And this is a typical whale engineering, like liquidity engineering process. This trading 101, futures 101, trading 101. This is what happens, right? And this usually comes from the futures markets when you get a lot of liquidations and forced liquidity appearing in the market. When that happens, again, this doesn't mean the market is invalidated. The same way the market was not invalidated for its bullishness in here when everybody was wishing me death and sending me death wishes in DMs because I was saying that reversal was bound, right? Well, this local sweep, this local whip, so like they didn't really invalidate this. And similarly, I would not expect this to invalidate it either. But guess what? It will take time, most likely, to recover. It's not going to, like, it's safer to assume that it will take time to recover. A couple of days, couple of weeks. It's safe to assume it's not going to happen in December as well, right? But well, my initial thought, my initial plan, based on the technical analysis, based on the seasonality and other fundamental factors, was momentarily and temporarily, short term, disrupted. This move happened on a short time frame. It doesn't disturb long term directions. It just extends it in time, right? So local range, PTSD range. People need to escape the denial. The market is trending upwards, so it needs to take time to probably trade a bit, sideways in a chaotic movements with a lot of chop, with a lot of unpleasant volatility on the market, which was going to wipe out a lot of people. Again, we're putting the life savings on the futures account and leverage times 50 or 20 or 15 or whatever, and just because somebody said something. It takes time, but unless the world collapses, this is the trend. This is the upwards trend. An average price of Bitcoin is around $48,000. This is its fair price. This is its fair value. Bitcoin says its fair value. So I hope it clarifies that. Locally, before we go into other assets, locally, like if we apply the volume weighted average prices ever since the peak, right? I hope it shows. Okay, did it glitch or something? Okay, what's up with this? Trading view, hello. Okay, that's strange. Let's kick off TrendSpider. If trading view cannot hold it, let's kick off TrendSpider. So this is the local situation. This is an hourly chart. Okay, anchor that either at the very peak here, or something that is more relevant, perhaps, which is that high area right before the crash happened, right? Apply it at the local high as well, right? So we take it. This is a volume profile. This is what average volume weighted average price would tell you. This is a volume profile analysis, basically. And if we take it, if we take it, again, an anchor that here, an anchor that here pre-crash, and anchor that perhaps here off the bottom to the local, let's say, price action highs, then you see certain alignment that there is some volume consistency, there is some volume confirmation, convergence of the volume profiles, right? Throughout the entire dip happening. That is what you can tell. There is this entire crash that happened. You can tell that there has not been too much volume on that crash, right? The order books seemed quite heavily empty, I would say, right? Because otherwise, if this was some massive selling, if this was some massive, I should say, like bear market starting, you would see the majority of the volume aggregated in the lower part of this, right? Which would tell you the bearish pressure is actually very high. But what it tells you instead that there is this tiny this tiny volume that happened, throughout the crash. And this volume, the biggest amount of liquidations happened here, or like liquidations and transactions. Yeah. Other than this, we have the support or local resistance in here, and local area of interest in here as well, right? So these volume shelves that confirm over the time, and this volume shelf, right, depending on what the price action location, it tells you that, okay, we have the resistance or support in here and basically in here, right? So after that, the only level that can actually disturb it somehow is this 54 local tiny spike. This is the volume weighted average price of this crash and then dip that happened. So I would expect, some local, there's this clustering of resistances, of course, right? So this is definitely, as long as we trade below $54,000, this is going to be unpleasant chop. Over that, it trends back, right? Probably upwards. But it means that it will take time for us to consolidate, most likely within the largest volume area for most of the time, right? So I would expect us to continue trading in this local range, right? Between like 46 and 50, $52,000, with occasional perhaps sweeps like in here locally in case some unpredicted news comes out. Perhaps till the end of the year. I don't know, right? Long-term direction is not really canceled. The bull market is still on. Similarly, the COVID crash didn't disrupt the bull market. Same way that June, July market might crash earlier this year didn't really invalidate the bullishness. This local hourly crash that happened, just like I was saying, this local crash that happened for 20% downwards from 52 to 42,000. This is a short-term thing. Short-term thing means short-term implications, no long-term implications. Local range, then we should trend back up. That's my point for Bitcoin, right? I hope it makes sense. Okay. I cannot see what's going on in the chats, and basically, let's go and jump very quick to Ethereum, perhaps. Let's show off. Let's flash this Ethereum chart, okay? Let's happen to see as well the Ethereum BTC. I'm just preparing that as we speak. Okay, let's play it. Right here. Okay. I hope it's playing the charts. Let me double check if it's playing chart. It should be playing the charts. I think there is some local delay. Okay, so basically we have pretty clear situations to me. Clear situation. Of course, Ethereum has been tremendously trending up, right? There is nothing bearish about Ethereum to me. As a matter of fact, this Ethereum, like Ether burning happening with transactions, I think this is very bullish. Deflationary model is what rises the value because it builds and it adds to the scarcity value aspect of the value building. So locally, like this local dip that happened, like this is Ethereum chart. This is dip. You cannot even tell when that happened, right? That's what I'm talking about. This local price shock that happened, this local unpredicted 20% decline that happened for whatever reason, this doesn't invalidate its long-term bullishness. That's it. Same way, you had a very strong confirmation from a year-long symmetrical triangle breaking out, right? This weekly close that happened is basically amazing confirmation. Not only that people, chose Ethereum over Bitcoin, kind of like to hedge against Bitcoin's weakness, volatility, whatever you name that, but also they speculate that it's going to that it's locally prevailing against Bitcoin, right? So this weekly breakout with the candle close through the upper bound of the symmetrical triangle, this chart pattern, this is a confirmation for an upwards trend continuation, right? So this is a very significant tendency, which in my opinion is going to lead liquidity, behind altcoins as well. So the long-term plan did not get invalidated on Ethereum either. Is just local, bearing over the short-term effects and implications, and that's it. Let's play the Litecoin chart. This is some older chart, I think. Let's actually turn off these. And this is 50. This is, what is it? 200. Okay. So again, weekly chart, right? To me, it's still one big consolidation, right? Lower highs, higher lows. This is classical chart pattern, classical symmetric triangle, no matter how we call that. And it's consolidating still in the previous area of weakness, right? It's still consolidating around this area of two potential levels, peaks, troughs, peaks that actually, like if you take the linear chart, right, which pretty much eliminates all the noise out of the candles, then you have a support area in here, you have the resistance area in here, right? With the new highs, it's pretty much included in here. So it's trading sideways in a clear pattern between the local resistance and support, and it's bearing that pretty well, right? But guess what? Like, to me, of course, took some hit about that, right? I got my 3x longs of the 140s or 120 $140, I think. 140 and 150. I got a couple of low leverage longs. I think I didn't even log into one exchange to see if it's still there, but they go liquidated, right? Just like I say, like, losses are something natural, right? I can stand getting liquidated out there because that's the risk. I was using specifically no stop loss out there. I was not protecting myself because the position size was my stop loss. The amount of money that I put in there was my stop limitation. I didn't put my entire life savings and wealth that I have in fucking leverage. I put like this tiny amount, like 0.2% of my entire portfolio that doesn't even bother me when I lose it. But that's the point. I can take the losses, right? If you over leverage yourself, if you play with high leverage, with high money, life savings, and mortgages and loans and selling cars and apartments and putting that on leverage, then it's your fucking fault if you lose it. You're just a terrible trader, probably, right? Because there's nothing rational about doing that. There is no risk management. There is nothing rational or wise about that, right? So to me, the long-term direction didn't change. Like, it's very clear to me, right? If you incorporate, hopefully this displays this time, if you incorporate this volume-weighted average prices, then locally tells you where the supports and resistances are, right? It tells you that basically we are at this local layer, right? This is supposed to be a support coming off the highs of April and July, now April and in May. This is I think the COVID crash area in here, right? So it tells you basically that we are trading at its fair value. $150 and $180 is its fair value according to price action alone and the volume. Like, I'm still bullish on Litecoin. I'm still having this $1,000 like targets, but guess what? Like, I cannot promise to you Bitcoin is going, like, I cannot promise to you I'll wake up tomorrow. Perhaps I die. I don't know. Perhaps all of us die because the asteroid crashes into Earth and we all die and go extinct just like dinosaurs did, right? But assuming, if there is an assumption to your trading that things like that do not happen, then this Litecoin's upwards trend is in a clear consolidation right now. Okay, per this chart, which is technical bullish continuation pattern, the symmetrical triangle, and it's trading at its fair prices, right? Like, to me, there is nothing really crazy about that, right? You just apparently need to be a couple of weeks longer in the market to see the same results. That's it, right? I'm pretty much around the break even on my spot entries on Litecoin. I think I was loading around 140 and 150 as well on Litecoin, right? So I'm pretty much back at my break even, but I don't really care too much, right? Because that's the risk. If I'm wrong, I'm fine losing money with that, right? Because I was wrong and I need to pay the price, and it's not anybody else's responsibility to pay me back because I was making my decision one way or another. Inflation is bullish for crypto, right? Inflationary hedges, which are commodities, which is gold, which is silver, which is hard assets, which is real estate, lands. All of that is supposed to be an inflationary answer to rising and soaring, rallying inflation. And crypto, because being a deflationary most of the time, right, and being digital version of gold, this has fundamental reasons to go up as well and to continue. So, like, Bitcoin has never been more valid. Bitcoin has never been more relevant right now to these times. And we have extreme fear unseen, like, since basically the lows of $30,000. Well, to me, it's probably the wisest to either wait until the market recovers from the price shock, and then kind of like, just be a man and wait a couple of weeks until it happens, or or just switch to long-term direction. That's it, right? Okay. Oh, come on. This is so funny. Okay. What's up right now? Let's see. Let's see. There were a couple of Discord requests as well that we had. So let me check. Let me check very quick when that happened. What to cover from these. Okay. Exiting and protect capital and validation on point on high time frame. When to actually think about exiting. Well, I had been exiting the market for some time already, and I was very clear and open about that. I had been differentiating and my assets, distributing my profits gathered in the past couple of months into hard assets, right? Gold, silver, real estate, all that. This was a process. This takes time. This doesn't happen just like a click out of nowhere, right? All of a sudden. So it's a process, and this process lasts. And I'm just not being aggressive because the NUPL didn't go back to the levels over 0.75 that I wanted to see to intensify my aggression about leaving the market. So when, like, my points didn't change, invalidation point on a high time frame is basically when some third world war escalates, right? This would be an invalidation of the bull market. For me, main case right now is the question: is our high time frame approach has changed due to abnormal price action in the markets? Would be pleased if you could involve this question in the webinar. So I already answered that, right? The only way to actually see invalidation of the bull market, which would be something very unnatural, and then a premature ending of the bull market's rally ever happens, and it happens only when some wars happen, like global wars, world wars. if it's possible, I would like to hear your thoughts on Ethereum and Matic. Okay, so Ethereum, I think it's next to 4 weeks. Okay, so next to 4 weeks, basically, I expect to whatever Bitcoin does, it should trade probably in this local range. So if we were to do pause this chart, freeze this chart, Ethereum is going to probably oscillate in a local range, just like something like that, right? But because whatever this upside boost on the BTC Ethereum BTC pair, which means that Ethereum is more often peaked versus Bitcoin, then well, this upwards trend here coincides with Bitcoin's local sideways. So you have either sideways or slightly positive upwards trend, similar to what we saw in here. It's like local tiny thing going on, right? My long-term targets for $10,000-$20,000 are still there, but like if you are trading based on that, that's your problem, right? It's not my responsibility to manage your money. That's my expectation. If I'm wrong about that, I'm happy to pay the price, right? If you're not happy about witnessing losses, then quit the market, and that's it. So yeah, I'm generalizing, of course, right? Because we don't have such a problem in the nest. But so many people are salty, of course, because of the market dropping. They're never salty when the market is green. They're only salty when the market goes down, right? And so local sideways, probably a couple of those similar candles, just like you would see this high wave doji, now this high wave indecision with such a large wide range. Probably continuation local for next 4 weeks. I would expect us to trade between the range bounce of the all-time highs and the local low. Not much fireworks, in my opinion, because the superposition effect of Bitcoin in indecision, or perhaps trending down on the short term, would be coincided with the upward trend on the Ethereum Bitcoin, which actually just neutralizes this entire thing and makes it go sideways. Sideways also would apply or local upwards because of the bargain on Litecoin. Similarly, next couple of weeks. So it does seem to me that the safest bet is to expect sideways until the year ends, with occasional faults probably coming up. That's my bet. That's my bet. Ethereum BTC is covered. Matic. Let's see Matic. Right? Let's see Matic. I think if there you go. So the chart is playing tricks. Let's see Matic. Oh, screw this. Let's see it on TradeSpider. I assume because there is no, I think there is no pair for whether it's BTC pair or USD pair. So let's take this. Let's take daily. And what does this daily chart tell me, right? There's no more data. This is Bitstamp. Perhaps let's take Binance. Okay, let's take the logarithmic chart. Interesting. It looks similar to Bitcoin. This is not going to be much of a use. Weekly data. The daily, better daily. Right? So, oops, it's a large local sideways. As simple as that. It's moving in this range box. Right? As long as it does, it's not trending by definition. The moving average is still climbing up also, although it's seeing local deceleration, right? Local momentum loss. But it's trading sideways ever since May, basically in a very wide range of 0.63 up to 2.5. This is a large range, right? Locally it's trading. Locally it's trending upwards. Locally, right? Locally it's trending upwards because of it's making the low, high, higher, low, higher, high, higher, low, higher, high. So it's clear upwards trend locally. But on the major time frame, on this larger picture, it's trending sideways, right? As long as it does, it can actually go back and forth, left and right, do fucking flips, whatever, right? And it's not going to change and impact the direction of the market. It's trading sideways. Sideways means indecision. Sideways means no direction, no trend confirmation. Sideways means risk. Although it also, when the sideways range bound is vast, is expanded, you know, this usually can be played for good mean reversion, for good mean reversion trade systems, right? So you can just buy the lows of the range or sell the highs. Locally, it's in the range high area, right? So I would not necessarily get it as the good long for long term. Perhaps there is going to be mean reversion around like 1.4, right? When that happens, perhaps that would be a good idea. But unless it actually just, breaks the new high and then withholds the lows in here with the breakout confirmation, then I would not expect this to leave the range box. That's it. Litecoin is covered. Nice to see you back. Very helpful if we can get a feel of the market long-term tendencies explained. People are freaking out right now. It's very true, buddy. But I feel there's differentiation between mid-level bear market. Bear market is a primary market, same way that it's a long-term thing. You don't have 1 minute bear markets. You have only 1 year bear markets, right? So a couple of months, like early this year, long-term 6 months plus trend, I feel would be a bit of breather for everyone currently at a loss to know that the overall tendency is still to get back in the game. That's it. Might be good. Yeah, so that was already explained, of course. Might be good to get some detail about market structure breaks. A big question I've recently had is there is a time frame they're talking about that can invalidate market structure being broken. Let's say a higher high is made fairly quick compared to the last lower low in a downtrend. Do you wait for confirmation or another high for a higher low for trend reversal? Or do you take that single higher high as a market structure break? Okay, so here's the thing. I know you're probably referring to Lips's point. I have a different understanding about the market structure. Basically, market structure is, to me, demographics, right? By definition, the market structure is demographics. Like the market is structured of people, consists of people of different age, of different experience, of different limitations. So when we are talking about the market structure, I understand it and I comply with that we are talking about the market demographics, and crypto demographics are completely different than, for example, soybeans traders, right? Where you would have on the food market, you would have less volatility, way more mature and experienced traders, Peter Brands investing all over the market, right? Versus 15-year-old people who joined NFTs and then crypto. So the market structure does imply different rationality level, let's say, different consistency and less volatility, perhaps, right? So that is what I understand about the market structure. This is what I understand and take as a market structure. So this question is most likely more to Libs. He has a different understanding about the market structure. I'm not saying it's wrong, right? Everybody, like, to be honest, it doesn't matter how you name things as long as it works for you, right? If you call it market structure, I simply call it trends, right? That make higher sequence of higher highs and higher lows. So I don't call that market structure. So I guess the easiest way for the market structure and the understanding and the meaning of Libs, that would be probably wiser to ask him what he means by that. He's a great trader, right? So it's just a name we frame or name things. That's it. Is there a time frame again that it can invalidate the market structure being broken? So time frame, like, to answer that again, the trend, assuming by the market structure you mean actual trend and tendency of the market to go consistently in one direction or another. there's no time frame basically for that, because every time frame has its own trends, right? If you have a look, then every every candle of this, every candle of all these series in Matic, it is composed of smaller candles, right? If you go, and take these local highs, right, and if you go down to perhaps 4-minute chart or whatever, you're most likely going to see, again, same candle developed and telling you more detailed story. It doesn't mean it's wrong, but it can be, just like I said, it can be bullish and bearish at the same time, or neutral, because depending on the time frame you pick, you're going to see different signals. You're going to see different tendencies of the market. Locally, to me, it's consolidating on 1-minute time frame, right? But does that mean it's consolidating or it's bearish on a monthly or an hourly? Not really, not at all, right? So there's no one time frame that answers this question, because the trends, the tendencies of the market depend on the actual time scope you focus on, right? That's it, right? That's it. I mean, uh, and as long as the market, makes high sequence of higher highs and higher lows, right? This is an upwards trend. As long as it makes a sequence of lower highs and lower lows, this is an upwards trend. Anything in between, a sequence of higher highs, lower lows, higher lows, lower highs, whatever you see going back and forth, this is sideways, right? Trends, upwards trends and downwards trends are very strictly defined, and most likely, like, again, you would have, depending on what time frame and what indicators you use, right? If you use, for example, moving averages, then the information that you would want to search for is that the market reverses when the moving averages goes down and descends. As long as it goes up, it means that the smooth trend, the average trend, is going upwards, and that this is bullish, irrelevant of all these stories happening in between, right? So the clear indication for the trend followers, for example, would be so that the moving average just starts, coming down. If you are a support and resistance trader as your anchors, then every resistance break is bullish and every support break is bearish, right? Unless it, of course, is full of chaos and full of noise in the markets, crypto just like it is, and you see a proper, a break out on the downside, right, and it rallies back again, then usually this is called a bear trap, right? This is called a bull trap if it sinks back again inside a range. And such a thing is just a larger noise, it's just a larger range. It's not trending, right? So assuming depending on what kind of indicator you choose, you would have different answer. Do you have plan B? Plan B. Okay, regarding your exit strategy, you've been pretty vocal about an EPL exiting markets about almost entirely during peaks. Do you consider the case where we are all wrong and this is not coming this cycle? I've been escaping the market slowly over the last months, weeks, but I'm still like 60-70% wondering when to put the trigger. Now, well, I've been scaling out for past couple of months. I basically, throughout this bull market, ever since 2017, in the bear market of 2018, even if I lose everything right now, I'm still good, because I earned so much money. I took so much profits on the way for the past couple of years that I'm not really bothered, right? I could retire for the rest of my life and then lay on the fucking sandbed and sunbathe for the entire rest of my life. But that's not my point, right? I'm not this type of a person. I love building, I love constructing, I love helping out people, right? Just like this webinar. Actually, I should have been home already for the past 10 minutes because there are friends waiting for me and my family. But I'm spending this time, like right now with you, right? So I hope it speaks for itself that I really care and value your being here. By the way, if you are here, if you're watching that, and you make sure actually hit the subscribe button, smash the likes, and leave some kind comments. I do my best to actually go through the questions after the show ends, after some time. So make sure, guys, you actually show off your appreciation, to help us kick off the YouTube algos, right? Because that is that is it, right? So my plan B regarding that is um, I mean, whatever happens, crypto is my plan B basically, right? I would be talking about plan C maybe. Even if I lose everything right now at this moment, something happens. I don't know. I get hacked. I get robbed. I'm properly diversified right now, so of course I would get a painful back stab in a backbone. Um, but that would not disturb my life. So if I lost everything right now, if everything that could go wrong went wrong for me, then I would just keep doing my job, right? I would just keep doing, sharing this knowledge. I would just keep, how to call that? I would just keep doing what I'm doing right now in my life with no changes applied. That's it. Because I know that money can be rebuilt, right? You cannot rebuild your health, you cannot rebuild your life, you cannot rebuild your family, but you can rebuild your money. So as long as I'm determined, to go and strive and continue growing with you on side, then I would just keep doing that. And if I lose everything, then similarly it would be just like this local price shock that doesn't impact my long-term trend, that trajectory in my life. Right? I would just take it as a buy the dip opportunity. Perhaps it would make me rethink a couple of things in my life. But that's it, right? Uh like I'm businesses. I see businesses going on in the chats. So businesses are investments. Not many people think of it this way, but this is, you dedicate your time and money into growing a business expecting certain return. This is an investment. You put in money, you put in your time and efforts, right? Expecting certain return. This is the nature of business. This is how the companies work all over the planet. Uh, Frankly speaking, I made so much money that I could retire. I don't need to. I don't need to run Nest anymore. I don't need to work a second longer in my life anymore. But that's not my plan. That's not my will, right? So I'm not doing that per se for the money. Like, of course, I have beautiful entire team that I need to pay for the work when they work 24/7. So otherwise, I would be just paying money out of my pocket, which would be a terrible investment, because that would be an investment that instead of bringing the profits, that would generate losses for me constantly and continuously. So that is not my plan, right? Uh, and um, and plan C for me, everybody, would be probably continuing what I'm doing right now, even if I lose everything, right? Uh, but if I don't lose anything, then my plan B is the long term trajectory, is the long term. All the targets are valid. It's just a local time time. There's this local time period that Bitcoin took longer with the local price shock on an hourly time frame, and it just extends the gratification in time, right? Just delays it. That's it. Um, yeah, everybody. I think there's been quite a fruitful coverage for the Q&A as well. So I think it's also time for me to slowly close off this webinar. I just have one request for everybody. Go and choose one person like that you can approach and say that you love them, right? Don't be part of this hateful toxicity direction that is happening on Twitter. Don't be part of this madness. Uh, just try to bring light and hope, into other people's life. Just try to bring goodness and kindness, and it's going to pay you off so much better than being hateful, than being toxic, than being, uh, you know, uh, wishing bad. Just find one person. This is your main takeaway. Find one person that you love, and tell them you love them. Go and hug them very strong, and that's it. That is what will prevail. Money is going to be rebuilt. The time you spend while being um the time you spend while being a very bad person is not really going back anymore. So this is quite a large opportunity cost. All that said, I think I covered. There's some repetitive questions. I think some people joined in the past like 5 minutes or something. I covered 99% of these questions. I already covered. So if you're asking about Litecoin, Ethereum, Bitcoin, or whatever other like stuff, I've already covered that for this entire 1 hour and 15-minute stream. So it's going to be replayable. You can rewatch that. You can replay it at any time, and you're going to find your answers. That's it. I hope everybody just had a good time. It's good to be back after such a long time of preparations for my CMT3 exam. The results are about 8 weeks from now, so we'll see how it goes. Yeah, I just want to say I love you all, guys. Find one person, hug them, say you love them, and the world is going to be at a better place. That's it. All for today. All the questions, all the inflationary aspects, so Bitcoin, Ethereum, Litecoin, crashes, price shocks, all of that was covered along with the Q&A and the Discord requests. Love you all, guys. Stay safe, and I see you on the next show.